Overnight, 86% of the currency in circulation was cancelled. The goal? To deal a financial blow to the black economy. A year later, was it all worth it? Watch the demonetization experiment on the 8th of November with Ira Duggal, only on Bloomberg Quint.
Well, if the pharma stocks needed a good sign sometime, it was today. Cipla numbers, not a bad set of numbers. I don't think the stock is really improving too much, despite the numbers looking slightly better than estimates because of the Lupin overhang that is probably there on that entire pharma pack. So Cipla is the second worst performer or the third worst performer on the index right now. But let me just quickly take you through the numbers. I'm sure Darshan will be ready in moments from now. Navneet would have some thoughts. But the EBITDA numbers, much in line with what I think we were working with, but by and large the numbers, the top line numbers have come in slightly better than what we were working with. Margin should come up on your screen, 19.7%. Our estimates were 18.8%, or the Bloomberg estimates were 18.8%. So operationally, the numbers seem to have done a tad bit better as well. Anything else you're picking up, Navneet?
Well, clearly, operationally, the numbers have done better, but there was another income of 113 crore versus 27 crore, which was seen in the corresponding quarter. I think Darshan is ready. We'll go across to him and find out what exactly, or rather, how the September quarter panned out for Cipla. Darshan, over to you.
It's a strong set of numbers from Cipla this time around. Even though the revenues were in line, operationally they have managed to do extremely well, because on the top line it's come in at almost 4082 crores versus our estimate of 4015 crores. Profit is up at 566 crores versus our estimate of 422 crores. And basically, if you're looking at the EBITDA is a big beat, so it's much higher than what we were anticipating. So 804 crores is the EBITDA that has actually come in versus our estimate of 756 crores. The margins coming in at almost 19.7%. So it's a beat as far as margins concerned by 100 basis points for a company which was struggling with its margins. Oh, no doubt, the other income is much higher at 113 crores. But look at the tax expense also. Tax rate has gone up from 16% to 24%. Cipla in a while will come out with this press release in terms of which geography did well. But these are the headline numbers, and with this headline numbers, we can say that the numbers are rather strong for Cipla.
Okay, Darshan, Ranjit Kapadia is with us. Maybe you would want to take some questions with him as well. Let me just open up the conversation with him. Ranjit, what did you make of numbers? EBITDA numbers seem to be slightly better than estimates. Ranjit, can you hear us? No, I don't think Ranjit Kapadia can quite hear us. Okay, Ranjit, can you hear us? Let me try my luck again. Ranjit, can you hear us?
Hello.
Okay, yeah. Ranjit, hi. What do you make of the Cipla numbers, Ranjit? No, I think we are having a slightly patchy line here. Darshan, anything else that you're picking up in terms of the numbers?
No, I wouldn't be. Basically, it will be the Indian markets which will have done well for Cipla. I'll be very interested to know how they do as far as the US market is concerned, because that is where they were lagging and any turnaround. But this 19.7% margins in Cipla is a big surprise. The management has time and again said that they're doing stuff to improve their margins. It seems that all the cost controls, all the remediation that they've done over the past few quarters may be coming to play at this point of time for Cipla. But the devil is in the details in what they've done. But the headline number, sure, it's a decent number for Cipla.
Correcting further, I might add, Cipla is now down close to 5%. So maybe some devil in the detail, or maybe just the Lupin overhang. We don't know. 5% now down for Cipla and counting, so it's not turned out.
I think just also if you can just pull up the 5 or a 1 week or a 1 month chart on Cipla, probably that will tell you the story what's happened. It's been a marked outperformer. It's run up significantly. Just look at ahead of the numbers. Just look at the move that's come up. So probably that's what's happened. Numbers probably the market knew, or they were anticipating a strong number, so probably profit booking, and probably yes, the Lupin overhang, because remember Cipla also has a plant in Indore which is not cleared yet. So that's another thing I want to say. I'm not saying that US FDA is going from Indore plant of Lupin to the Indore plant of Cipla, but yes, overhang on pharma will be there.
For sure. 7.5% now down for Cipla, mind you. It's really falling apart. Let's ask Ranjit Kapadia. Maybe we'll get Darshan to look at the numbers in detail, and maybe there is something else as well. Let's leave Darshan for that. We'll get Darshan back, of course, for Lupin. But Ranjit Kapadia is with us. Ranjit, what do you make of these numbers? They seem, optically, they seem very healthy. The stock is correcting maybe because of an earlier run-up. But what did you make of the numbers?
I think the numbers are pretty good, and it is better than the market expectation. The stock should look up because of the good set of numbers. But the market condition is such that the stock may remain subdued for some time. The good set of numbers, inching towards 20% margin. So 19.7% is a good margin, which is on a quarter on quarter also there is 160 basis point improvement in the margin. Bottom line growth also very good.
Well, clearly, Neeraj, I'm just looking at the balance sheet. If you go by the cash balances, that's gone up. If you compare them to FY17 closing, 789 crore versus 610. So the cash levels also on the book is going up, Ranjit. But overall, I think even Darshan was expecting that the Indian side of the business of Cipla was supposed to perform better. Any details there that you're gathering?
No, I don't have any details because the numbers, detailed geography-wise numbers have not yet come. So it is difficult to, but still overall numbers are better than expectation, and because of the margin improvement, and I feel that GST, there is a restocking at the after effect of GST, so that domestic numbers should see much better than what is expected.
Well, the stock is down 8%. Ranjit, what's your full year expectations from this company, and what's your call on Cipla?
No, we have a buy rating, and we have a buy rating for the target price of 610, but we will review the numbers once we get the full set of numbers.
Ranjit, buy rating with the target price you mentioned 610.
Yeah.
Okay, and the current market price is actually above that. It's 635. So I'm just wondering, will you change your rating now?
Yeah, we will have to review the entire thing in toto, and then we'll be able to give the full set of numbers.
Okay, by the way, some news flashes on your screen as well. Ranjit, just stay on. I just want one comment on Lupin. But by the way, Henkel AG decides not to exercise the option to buy that 26% stake in Jyoti Labs. And that stock too has come off. Just pull up Jyoti Labs intraday too. It's not turning out to be an afternoon of pleasant surprises. It happened about 3 or 4 minutes ago, but that stock has really come off like a pack of cards. 12.5% off for this one. Ranjit, before we thank you, a quick thought on Lupin as well. Avoid?
Yeah. I think this has come as a surprise. Goa and Pithampur facility, the combined warning letter. And this, at least for 2 quarters, the stock will remain subdued because of this. And after that, once remedial measures are over, we'll see whether re-inspection takes place, how fast the re-inspection takes place, and how fast the stock gets re-rated again after the re-inspection.
Fair call. Ranjit, we'll leave it at that. Thanks much for joining in. Now, before we get into our market expert, because the index too is really cracking now, down 1% for the Sensex, the Nifty and the Nifty Bank. But Darshan is here as well. Just before we get into our market expert, Darshan, it's been now about half an hour since the news first came out. Any further inputs on Lupin?
See, for Lupin, it's very clear, you know, but it's a big negative, you know. My point is, and this is, the reaction is so sharp, because the market didn't anticipate this. This just came out of the blue. Even if you see what happened post the numbers in the conference call, the management was pretty confident that, you know, they will get the plants cleared. So, but that didn't happen. In fact, they got a warning letter. So what this impacts is, financially there is no impact because they can go ahead and sell products. But on the future earnings, there's this big impact because, you know, they have a line of products which will not get approved now. And you know, there are 2 main products, that is Fortamet and Glumetza, are facing stiff amount of competition. So that is something that will dent them, and you know, because of this, they won't be able to, there is this problem of existing business competition that is coming in, and now new approvals won't come in. So that's the problem. Now we'll have to look at the warning letter now, which in most cases will get uploaded tonight on the US FDA sites, to get a sense of what exactly has happened and why they've given this warning letter poses. But expect EPS cuts to come in, expects downgrades to come in for Lupin. So it seems Lupin is stuck in the worst time because nothing seems to be working for them at this point of time.
The price fall or the price movement certainly not working for that one either. Darshan, thanks for putting that into perspective. 17%. That's a really, really big move for Lupin, but it's kind of soured the sentiment across. The market's too feeling the pinch. I don't know if it's because of this adverse news flow or crude or a mixture of a bunch of other things. But let's talk about all of that and more with our guest. I think there is some news bits on Henkel, and we'll get in Charlene to talk about that too. But Mr. Gopi Krishna Shenoy, he's the Chief Investment Officer at SBI Life Insurance, joins us in the studios now about his thoughts on the markets by and large too. Good having you, Mr. Shenoy. Thanks so much for joining in.
Thank you very much.
If you had money, and I'm sure you do, are you sitting on cash levels which are substantially higher than what they were 6 months ago? Do you believe that will be a correction?
We never believed in keeping cash to a large extent in the portfolio. So we've been hearing of overvaluation since it has been at 30,000, but index has still moved. So our sense is that markets have taken no earnings growth to its stride, and it is ready to wait. So we have seen after this new government, markets moving up 26% in 14-15. It corrected 9% in 16, and it again moved up 18% in 17. And over and above FY17 close, we have almost 10% today. So I think market is here to say that we are okay with the flat earnings, and we will wait for earnings to grow. So our sense is maybe 19 will see a good growth, and we will play the market without holding much of cash.
Okay. Just hold on to the thought, Mr. Shenoy. It's just a day of busy news and have to address some of these because Charlene D'Souza, I'm told, is mic'd up for this piece of news as well as it is coming in. Charlene, explain the significance.
Yeah, so Henkel AG has decided not to exercise this option to pick up to 26% stake in Jyoti Laboratories. Now this deal, this option was signed way back in 2011 when Jyoti Laboratories had acquired Henkel's India operations and due to which they had kept the offer open so that in FY17 Henkel could come back into the Indian market and had left the option open for Henkel to buy up to 26% stake. Now the option had expired on 31st March, but then it was further extended to 31st of October. You know, the option was that Jyoti Laboratories could further extend this option, but since Jyoti did not, Henkel now has decided not to extend this option anymore. Henkel at least will not be able to buy this up to 26% stake. If this went through, if they picked up at least 26% stake further, then it would have triggered an open option. But now it's clear that this deal is not going to go through.
Listen, why, Neeraj is seeing that fall coming in the stock price of Jyoti Laboratories as that agreement which Charlene mentioned, it was signed in 2011. They had that option to acquire additional 25% stake, and the street was actually factoring in that this deal could happen at a significant premium to current market price, and that's the reason why you're seeing that crash coming about. I think the time period was extended till the month of November, but clearly now that Henkel AG has decided not to exercise their option to buy up to 26% stake in India, that would have changed hand in terms of let's say on the management front, and that's the reason why you are seeing that big drop coming in the stock price of Jyoti Laboratories.
No, it's also a question of if you're buying that, exercising that option, that you're showing that confidence in the Indian partner.
Sure, you are.
And not going ahead and exercising this option because the deal was agreed at a pre-approved price. But this shows that...
I think they had a deal. I'm not very well versed with the contours what were there in the 2011 deal, but what the street was factoring in case if they acquire that stake, it would happen at a premium. Also, it would be positive. It's always a positive, and an MNC comes and acquires, stake in an Indian company. It
which they have, right? So the idea would have gone up above 50%, and that's not happening.
Yeah.
So that's probably, I mean, I don't know if the street views as a sign of no confidence or low confidence or otherwise also, in addition to the price trigger as well. But any thoughts on the consumer space as well? There's sure Pradeep has questions on pharma, and I have questions on pharma as well. Yeah. But just since you're on the topic of consumers, what did you make of earnings this quarter, and what's the outlook ahead?
Not seen the earnings as such, but then in terms of consumer space, we are not so comfortable holding an overweight position on them, because we try to beat the index, and within the index we have ITC and Hindustan Lever, and in both these cases we find that the valuation is slightly stretched, so we don't hold an overweight position on this. Yeah.
Okay. So, Shenoy, in fact, what's happening in pharma, actually, if you look at it, traders have been kind of buying on every dip, assuming that at some point institutions will start to come in, they'll start buying, and therefore these levels will probably never return. Yeah. But look at Lupin. It has gone to a 4-year low today. It has broken all the previous lows. You know, when the earlier bad news had come in, the lows that were made 3 months back have now been breached. What's really your view? Is it a time for an institution like yours to come in and start buying? Have you started buying pharma already?
Not really, in the sense that we had two things which were actually concerning us in terms of pharma. First one is the dealer consolidation which took place in US. It came down from 5 to 4, and now it's likely to be 3 in the next maybe 6 months. So that is a prime concern that we had. The second one was with reference to FDA barring some of the companies from exporting to US. So both these put together, we have not been overweight on pharma, except for Cadila, where the approvals are already there in place. We have not been holding any of the frontline pharma companies. In Sun Pharma, we have kept an equal weight, but other than that, we have not been holding.
So you are actually buying select stocks, so to say, right?
No, we have been holding Cadila, and that's the only stock which we are considerably overweight compared to it.
And not looking to add anytime soon?
No.
Well, one pocket which is doing well in a falling market like today's is the IT space. The only sectoral index which is trading in the green is the Nifty IT index. What's the call there? Well, we know that the stocks have not performed that well, but the earnings, if you look at them, were just about okay. Yeah. Would you be a buyer in any of them, or do you have anything in the... No, nothing?
No, we do have holdings in IT, but the sector weightage is substantially lower compared to the index.
So have you been reducing the sector weightage in the past few quarters, or...?
No, we have held it lower since the beginning of this year. So since last year, we have been seeing that the IT spends across the globe has been coming down.
Right.
So that's the main reason why we have not been holding big weightage.
Which sector has the majority weightage?
So we have overweight in capital goods. We have overweight in automobiles. We have overweight in utilities. These are the 3-4 sectors where we are overweight.
So capital goods not really has been a favorite or a performer.
Yeah, if you look at capital goods, L&T is one of the stocks which is there in the index, but then there are so many other stocks. For example, companies which are owned by government, which are having good orders in the form of, say, Bharat Electronics or an Engineers India. These are the stocks that we are holding.
Okay. I have one final question from my end for you, of course. Your preference list seems to suggest that you're looking at certain economy-facing spaces as well, if cap goods is to believe. What's the thought on cement then? Infrastructure, etc., etc. All of these are good news, but the valuation's probably a bit of bad news.
No, I think infrastructure is something which we think will play out next year because of government allocations being good. So cement is one sector where we have kept substantial weight compared to the index.
Okay. Reason being, you think earnings growth will come in?
Earnings growth will come in, yeah.
And therefore the valuations will start looking cheaper?
Yes.
Okay. Shinoy, one question that we have been asking, and over the last 2 days, we have heard 2 experts coming on the channel and showing some concern on the market levels because of the way crude has moved so far.
Yeah.
What's your view really? Shouldn't equity traders or investors be worried looking at the crude?
Crude is one, I think, commodity which we have not been able to take a call on. We have not been holding stocks that are in the exploration space for that matter. So we don't take a call on crude, so it becomes very difficult. So we have held a view always that it is not going to go or breach $60. But unfortunately for us, last 1 or 2 days, it's been moving above that. So we have not been holding the stocks.
Okay, Mr. Shinoy, leave it at that. Thanks much for taking the time out and being with us through a to and fro and Apache conversation, but lots of news flows you can understand.
Thank you very much.
Thanks for being with us today. Okay, that's an important market view. SBI Life, of course, talking about their thoughts, but a couple of corporate reactions that we have lined up. Firstly, it's Axis Cades, the engineering technology company, is a stock that was buzzing. The market cooled down as a result in the stock cooling off as well, but they have acquired Bengaluru-based Mistral Solutions. Let's just quickly ask the management what this means for the company. The management joins us right now on the show. Mr. Sudhakar Gande, he's the Group Vice Chairman, speaking with us. Good having you, sir. Thanks so much for joining in. What does this acquisition mean? 175 crores is probably a mid-sized acquisition for a company like you. What does this acquisition entail?
Exactly. It's a good acquisition for us because this company has strong capabilities in embedded electronics and embedded technologies, which is a very, very important part of our business. So this will bring in strong technical capabilities to the company in terms of embedded electronics. Second, it's a 20-year-old company with a very strong management team. There are almost 50-20 guys built this company. And this team will be with us, and they have strong relationships with Indian defense establishments, for example, DRDO, Bharat Electronics, and defense labs, etc. And they have done more than 40 design wins. So they're bringing strong relationships and credibility and track record with the Indian defense sector, including defense PSUs. They also have strong global companies like Texas Instruments, Safran, Thales, etc. So in addition to technical skills, they will also have add customers and management team to us. Plus, more important for us, also equally important, is embedded technologies. I can take it to my customers like Airbus, Siemens, Caterpillar, etc. Because this is a kind of a business they require as of yesterday. So this will further deepen our relationships with our existing customers. And finally, also equally important for us is this is an EBITDA and EPS equity for the company, in the financial terms. All this together will make it a strong, deep technology company. And it'll also add one new vertical, Homeland Security, which we are not there. And as you know, Homeland Security is one of the extremely important part of Indian security system. So they will add that vertical to us. They're already in that space. So overall, it's a very good acquisition for us from all angles.
Sir, could you tell us how are you going to fund this acquisition?
See, this acquisition is funded partly by cash and partly by shares. Okay? The cash part, we already got lines of credit, everything available. As for the shares are concerned, we have got an independent valuation done. For example, there's acquisition almost 50-50, approximately, sales and shares and cash. Cash we already have. As for the shares are concerned, we are issuing new shares of Axis Cadet to this company. And third party independent valuation of the share is 207 rupees. That's how the swap ratio has worked out. So partly cash and partly shares.
Okay. Thanks so much for joining in and giving us that perspective, and all the best with this acquisition and the quarters ahead as well. Well, that's Axis Cadet with their acquisition news. The other one, IT related company which delivered an operationally strong quarter was Just Dial. Net profit and margins both saw an expansion. Let's go across to our research analyst Agam Vakil, who's in conversation with Just Dial CFO Abhishek Bansal.
Well, we've had largely inline earnings when it comes to Just Dial, at least in terms of expectations. However, there has been an operational beat with the EBITDA margins as well as profitability coming ahead of street expectations. But to take us through this quarter, we're in conversation with Abhishek Bansal, the Chief Financial Officer of Just Dial. Abhishek, thanks for joining us. My first question will have to do with what's driven growth this quarter, and if you can attribute any factors to this growth as far as the second quarter goes.
See, this particular quarter, firstly, in terms of usage of our product, the advertising campaign that we kicked in March this particular year has yielded phenomenal results. We had about 37% year-on-year growth in our usage. So unique visitors now stand at about 105 million for the quarter. As you mentioned, in terms of our EBITDA margins, absolute EBITDA increased 70% on a year-on-year basis. And 15% sequentially. Post my particular new role, what I have tried to ensure is initiated certain cost optimization activities which have yielded fruit. Employee cost on a year-on-year basis were down, which were aiding margins. Secondly, in terms of advertising spend, this particular quarter we had about 18.3 crores of advertising spend versus 22 crores the previous quarter. So that has helped the margins.
Okay, so Abhishek, let's come down to your search business. If you could give us an update about how your search business has done, and also perhaps a business on or update on Search Plus.
See, on the search business side, primarily today the revenues that we earn is from the search listing business itself. Operating revenues had about 8% year-on-year growth. However, same quarter last year had about 5 crores of Omni revenue as well. Paid campaigns, if we see, had about 7.6% growth. The positive thing for the quarter was that we have launched some of the bundled products wherein we are saying that if a SME pays certain rupees per month to Just Dial, they get listing visibility on Just Dial, their own mobile-friendly transactional website, visibility on Just Dial's banners on Just Dial's website, etc. These are being perceived as high value for money products by SMEs. These sort of products have helped us improve our realizations. So if you see realizations which had been on a downward trajectory due to increasing share of tier 2, tier 3 cities, we have been able to improve realizations sequentially as well as on a year-on-year basis.
Abhishek, you mentioned about 7.6% growth in your paid campaigns, and from what I've been reading in a lot of these reports is that traction in this area has been quite subdued. Can you tell us a little more about the kind of trends that you're seeing develop, and a little more of an idea in terms of demand for paid campaigns?
See, paid campaigns in tier 2, tier 3 cities as well as the overall revenue has been seeing good growth. We are taking steps to ensure that, even in our top 8 cities, we see healthy revenue growth. The feet on street teams, Just Dial's new avatar, the internet avatar, is more of a show and tell product. So it's the feet on street that we believe would drive higher revenues going forward. Last couple of quarters, we have ensured that we have put good management in place in feet on street teams. We have set high productivity benchmarks for these particular teams. Going forward, as we expand into more newer geographies as well as increase penetration in tier 1 cities as well for feet on street, I think that should help in more sign-ups and overall higher revenue growth going forward.
I think the other concern here is also the lack of price hikes in top cities. Can you tell us a little more about the pricing environment?
See, in terms of pricing, as we commenced our advertising during first quarter, we had taken hikes in top cities as well in our entry-level products. In fact, we have been successfully able to take those price hikes, which is what is showing up into better realizations. So that already has happened. In tier 2, tier 3 cities as well, earlier the average ticket size used to be much lower compared to tier 1 cities. Tier 2, tier 3 cities also, we have been able to take price hikes not only in our non-premium products but on our premium products as well.
And finally, Abhishek, we've seen about a near 8% revenue growth for this quarter. Do you think that Just Dial can eventually land up doing a near double-digit growth for FY18?
See, first 2 quarters have seen cumulatively about 7.8, 7.9% year-on-year growth. However, one thing to note is that first half last year had about 11.5 crores of Omni revenues as well. So on a like-for-like basis, we are sort of close to double-digit growth for first half. However, ideally what we would want is to achieve that particular double-digit growth on a overall operating revenue basis, which is what we are targeting to achieve as soon as possible.
Abhishek Bansal, thank you for joining us and taking us through those numbers.
All right, that's the management of Just Dial, and the stock has stumbled in today's trade. In fact, it's down almost 10%. If you could just pull up, trading at day's low levels of 428 on Just Dial. Well, let's move on to the other management. City Cable Network is the stock that's in focus. The company's net losses have widened to 52 crore from 38 crores, which were seen in the corresponding quarter last year. To take us through the quarter gone by, Rajesh Sethi, CEO of City Networks, is joining us, and also Saloni Dhanuka from our research team joins us. Saloni, over to you.
So, well, sir, it was a fabulous quarter for City Cables overall, and first up, subscriber revenue has increased substantially. So what kind of income can we expect going ahead, and secondly, what could be the extent of pressure on margins, sir?
See, our subscription revenue has definitely gone up. It has gone up by 21% quarter on quarter and 52% year on year. Subscription revenue has been primarily driven by two parameters. One is ARPU. So when you look at our phase-wise ARPU, our monetization levels have gone up per subscriber basis. Hence, our ARPU levels and all the phases have moved up. In addition to that, we seeded around 700,000 new fresh boxes in our markets, which again added up to our subscription revenue drive up. It's going healthy, and I think we should be able to produce still better results in the next quarter.
On the flip side, the activation revenue has gone down by 48% on a Q-on-Q basis. And can you tell us what kind of target are you looking at by this year end?
See, activation revenue again is a parameter of fresh boxes you seed in the market. Now, as the digitization is going towards the end of the road in the country, because most of the areas are getting digitized now, the opportunity to seed fresh boxes really is now shrinking. So when you compare our results of quarter one and quarter one, we seeded 1.6 million odd boxes. Whereas quarter two, we seeded 700,000 boxes. Hence the dip in activation revenue. So the driver is the box seeding you are doing, which is again driven by the digitization wave, which is now really sloping down.
Also in this current quarter, your HD subscribers have gone up by almost 30,000. However, the broadband subscribers have been more or less muted. So what are the targets over there by this year and again?
Definitely, we want to go a broadband business, but in broadband, we are focusing on three different parameters. One is controlling the churn, because adding new subscribers is one thing, but also sustaining what you have and holding back the people, because finally they add to your return on investments. So we are trying to bring down churn, and we have been pretty successful in that. Our churn ratios have gone down by 12% on annualized basis in this quarter. Second is moving ahead with reduction of our ground fault rate, so that again the customer satisfaction level goes up. That's again an area we have focused heavily. And third is what we call as smart deployment strategy, wherein we are not deploying too much of capex into broadband unless we are able to successfully monetize and have a higher percentage of conversion numbers from the markets where we are already there. Having said that, we have expanded into a new market. We have expanded into Nagpur, effective 1st November. We have just launched Nagpur. And the launch has been started with 70,000 plus home passes.
Could you also tell us about your average revenue per user looking like after the monetization of phase 3 and digitization of phase 4 in this quarter?
See, phase 3 and phase 4, when I compare my quarter to quarter, my quarter 1 phase 3 monetization level or ARPU level per subscriber was around 50 rupees. This we have moved from 50 to 55. And we have taken a significant jump in phase 4, where we have done a significant amount of seeding. For us, phase 4 monetization has moved up from 28 to 40. Whereas phase 1 and phase 2, there is only a marginal improvement, and they are generally around 105 in phase 1 and 85 in phase 2. Having said that, when I look at my portfolio mix, we are having around 3 million active subscribers in phase 1 and phase 2, and roughly 8 million in phase 3 and phase 4. And we definitely believe that phase 3 and phase 4 has a much higher level of leverage when it comes to movement of ARPU, which we are definitely going to gain in these 2 quarters before we close this fiscal. It should move substantially up in phase 3 and phase 4.
And so finally, can you give us some details on the update of TRAI's new tariff order plan and how will it pan out for the company?
We are very bullish on the new TRI tariff regulation order. We are eagerly awaiting for this to be announced. Pretty much bullish that it should be out any day with the fresh implementation dates. That's a fantastic move, and I believe that will definitely give us an added lever with regard to our go-to-market strategy and our ability to interact better with our consumers and also drive the content prices down.
All right, sir. Thank you so much for your time. It was a pleasure speaking to you. Once again, congratulations for a very good quarter. So that was the management of City Cables. Back to you guys in the studio, Navneet.
Thanks a lot, Saloni. Let's switch back to markets, which have corrected a lot. In fact, the Bank Nifty has seen a cut of almost 1%. Nifty obviously has come below that mark of 10,400, currently at 10,352. Let's introduce our guest on that note. Shrikant Chauhan of Kotak Securities is joining us, and also Natasha Shankar of Yes Securities is here with us in the studio. Good afternoon to both of you. Shrikant, let me come to you. How are you reading this correction? Would you use these dips to take any long positions or just stay away?
See, I think overall the structure of the market was showing that it was like over retraced in the short term. From 9685 it went to the levels of 10,500 all the way without any meaningful correction, and in that particular period the market has spent almost 23-25 days, and in the past also most of the time we have seen that whenever there is a correction, like market takes correction, it spent almost 20 to 25 days. So that is why I think the market is correcting, because it was over retraced. Certainly 10,300 is going to act as a very good support for the market, because there is a lot of option position is also standing. At the same time, technically also the market is having very good support. So there, if we see any reversal formation, then certainly we will come out with some buy recommendation. But till then, I think any highs from current levels will be an opportunity for us to take some short positions, because 10,300 looks achievable. In case if market sustains below 10,300, if it closes below 10,300, then the chances are that the market may even try to hit the levels of 10,180, 200, which is 40% retracement of the entire rise, and it's a very good and major support for the market. So we are not expecting market to sustain below 10,180, 200, but yes, in the short term 10,300 is also a very good support. And in case if we see this level hitting in today's date or tomorrow's opening, then there will wait for some reversal formation, and based on that we'll come out with some recommendation.
Okay, Natasha, our chartists are really getting negative on markets. What's your view?
So we do think that there's a bit of a bout of profit booking that is going on. However, not something that we're very scared about. We do think that in the near term we could continue seeing a bit of a weakness, which actually gives you an excellent buying opportunity in certain pockets and sectors where we do think that long-term growth is still there and long-term value is still there. Right. So if you're looking at the entire consumption pack, particularly on the consumer durable side, and even the auto stocks for that matter, building materials, there are very good value buys available even at current levels, and any correction that we see in the stock prices as what we are seeing today actually gives an excellent buying opportunity over there.
Any stock that you will be looking to buy?
So I think within the building material space, we like the plywood players. So Century Ply as well as Green Ply are our top picks over there. If we were to look at autos, then of course Maruti, Suzuki as well as Bajaj Auto would feature top of our list. And if you were looking at consumer durable, Symphony, despite the fact that yes, it is an expensive in terms of valuations, but given the kind of growth that they've been able to see and the kind of growth that we expect them to see, we would continue to remain a buy on them.
Well, Green Ply, Natasha, has touched its fresh 52-week high, and I guess the stock was active yesterday as well. It's currently quoting around those levels of 309. Let's also get Pritesh Mehta, Head of Technical Research at IIFL Wealth, who's joining us on the show now. Hi Pritesh, good afternoon. What is your reading of the correction that one is witnessing currently? Bank Nifty and Nifty both down almost 1%.
Now see, on the face of it, the screen looks scary and red. We have almost lost 140 points from the highs of the Monday, that is 10,490. But I think we must understand what Nifty has been doing in last couple of days, rather than just reflecting on the action of last 2 days. Because in the last week of August we had a breakout trade about 10,250. Thereafter, despite the wobble of last 2 days, we have been consolidating. We have been standing above this breakout zone of 10,250. So I think the real action, the real trouble will start for the market once Nifty goes below 10,240. And see, after a recent rally, markets will always struggle at higher levels. They will also try and consolidate. I think current scenario, current action, with lack of market breadth, with lack of participation of private banks, we were bound to see some sort of correction coming in. The narrow ranges which we were witnessing last couple of days, also one of the leading indicators that the market was going to see a big spike in next few days, and it is exactly taking taking place in today's trade. The only concerning part for me is the underperformance of Bank Nifty. We have mentioned this earlier also on the channel that traders tend to be fixated with the numbers, and we were much focused on the breakout zone of 25,500. We had that breakout movement on 1st of November, but thereafter we failed to sustain at the higher levels. And if you look at the figures of this week, Bank Nifty has lost around 0.9%. Private bank in particular has lost more than 1%. So I think this grinding period is going to continue. But again, amid all this choppiness, weakness, we must always find the pockets of strength. And IT is a space which is providing sharp movement on the upside. So I think something like HCL Tech and Wipro could provide good trading opportunities.
Okay, so that's the call on IT side. Shrikant, one chart, if you have looked at, Yes Bank, it has been falling with good volume, I think, at least 20 to 30% higher than average volume, as long as I can, calculate it. What's your call on Yes Bank? Is it a good time to short?
No, I think it is like fallen very badly from the high of 375 all the way to 300. And when it was at 300, there was huge volume. So till the stock is not again going to break the level of 298, I am of the view that around these levels, close to 305, 300 levels, we should be buyer. And we can keep a stop loss of close to 290 because it's a great risk reward ratio. And in such type of markets where like the stock has fallen very badly, which is a part of index, which is available at its support, and there are like huge volumes there, we can take some contra bets of going long, because if there is any reversal in the market from 10,300 levels, then I think this kind of stocks should do well. That's our view. So I think at these levels, not to go short, but look for some buying opportunities if there is any reversal formation.
All right, that's the view coming in on Yes Bank, a counter which is down almost 4%. Let's just pull up the intraday chart of India Volatility Index. Remember, it was trading in the positive throughout the day, but it seems it's cooled off a bit. Look at that, it's just up almost just 0.7%, and let's see if in the last 1 hour one can see any sort of buying emerging from these lower levels. But clearly it's not a great day for the pharma space. The pharma index, the Nifty Pharma Index, has tumbled over 4% clearly, and the losses have been led today by Cipla post its earnings, though the operating performance was little better, and the other is Lupin. What did you read of the numbers, Natasha, of Cipla, and what have you made of the news with regard to Lupin?
So I think even the last time when we spoke, we've not been positive on the pharma space for a while. I think within the space, only Aurobindo Pharma is something which has stood out and has performed quite well as well. As far as Lupin is concerned, of course, this entire issue with the regulator has cropped up again. But given their past execution history, they should be able to resolve it pretty quickly. And hopefully going forward, the approvals that they got in the recent past would help to drive the growth. But essentially, we would prefer to stay away from the stock as of now.
And what's your view on the overall sector? I mean, people have been buying, hoping for a bottom, anytime soon. But the kind of news flow, does that really give you a confidence that this is a good time to buy, or should rather wait?
So I think the entire pharma sector has got two issues. One is, of course, the regulatory issue, which seems to keep cropping up from time to time. But the more pertinent issue that they have is the increase in competition which has happened in the largest market of US, particularly on the generic side. So the kind of growth and the margins that we've seen historically is not something that could continue going forward. So the entire sector was poised for a re-rating. We've already seen a lot of correction coming in. Now, purely on the risk reward, probably it would make sense to buy, but purely on the basis of the fundamentals, we think that the re-rating is still due, and it would take some time for them to come out of this. We would prefer to stay neutral. Having said that, yes, you could take a stock-specific approach. Like I said, Aurobindo is our top pick within the sector because of the fact that they have received approvals and they have a good pipeline of approvals pending as well.
Would you have the same approach for the IT space, the only index which is doing well?
So I think the kind of movement we've seen on the rupee side is what has driven the performance on the IT stocks. But unfortunately, we don't think that that's something that would be very long-lived. They still have issues. They've not seen the demand coming back. They've not seen the kind of discretionary demand coming back. And even on the digital side, they've not seen those kind of incremental orders which would drive future growth as well as margins. Till such time as there's more clarity on that, we would prefer to stay away from it.
Well, if you look at Titan today, after yesterday's significant up move, the stock is correcting down 3.5% now. Pritesh, if somebody had bought yesterday or earlier, what kind of a trailing stop loss would you really suggest on Titan?
Now see, first of all, it's a good breakout trade, and in this kind of market, whenever stock is providing a strong range breakout, we as a trader, we should be buying that. And yes, we already seen a strong move from 660 to 760. The point of now keeping a stop loss, I think I would go back to the GAN number of 729 and try and put a stop around that, because I still feel that we are not yet done with the upside. The stock is going through a period of retracement. Once it comes back to the lower levels, I think we're going to have a good opportunity to get long in this counter.
All right, that's the call on Titan, but there are a few stocks which are still holding on to their gains, and one of them is NBCC. That's up almost 7%. In fact, let's just pull up the NBCC futures as well and see on the future side as well if there is any sort of action, because if you look at the stock, it's touched its fresh 52-week high in today's trade. Yep, look at that. The open interest is up nearly 29%. So at these levels also, there are fresh longs being taken there. Shrikant, NBCC on the charts, would you advise people booking profits, or still they should hold on to their positions?
See, for NBCC, the view is very clear that it is into strong technical breakout. Today's volumes are like exceptional, and the price movement is also clearly indicating us that it is into price and volume breakout formation. So one thing is very clear, that it is heading for the levels of minimum 335, 340 in next maybe a few days or few weeks of time. And the way it moved up in today's date, and even after there is a weakness in the market, the stock is not at all correcting. It means there is a genuine buying. So ideally, if there is any further more weakness because of any reason, instead of like going or reducing positions, we should look for adding some long positions, and we can keep a target of 330. So I think 265, 270 is the area of very good support for the stock.
Okay. So that's the call here. Natasha, looking at the PSU banks, you know, SBI and PNB have cooled off after that initial euphoria. Will you be looking to buy maybe at these levels or on dips?
So I think SBI, we would still continue to buy even at these levels, and even on dips for that matter. The bank has an excellent franchise. It's the largest bank in the country, and they would continue to benefit from the consolidation in the sector as well. And even within the PSU space, we do think that SBI has done a relatively better job of trying to clean up their balance sheet as compared to the rest of the PSU banks. Now, while the recapitalization story is definitely something which is very heartening, but the banks have to kind of scale back their lending practices and improve their balance sheet strength. Till such time as there are visible signs of that, we would prefer not to go with it. SBI, on the other hand, is a much preferred bet.
Okay, but the entire PSU banking space is weak in today's session. In fact, all your constituents of the Nifty PSU banking index are in the red. Well, let's just look at the futures and options market. After a lot of days, we've seen open interest addition coming in for a lot of your call strikes. So out of the money call strikes have seen heavy writing in today's session from the likes of 10,500, which was seeing open interest addition in the last 3 to 4 sessions. But specifically today, if you have a look at it, almost 15 lakh shares have been added there, and the premium obviously has gone down. It's currently at about 73. It's not only 10,500, but the 10,600, 10,700 strikes also added over 10 lakh shares. That's clearly telling you that the move towards 10,500 could take little more time. We all were talking about the 10,400 put strike. In fact, majority of the analysts were of the view that was the strike which was seeing a lot of open interest addition in the last few sessions. But specifically today, there has been some sort of unwinding which has come about, clearly telling you maybe couple of your put writers could be covering their position with the kind of fall that one has seen, and the premium which was there at the 10,400 strike of almost 70 to 80, the put writers would have been safe till the time index was trading above the 10,320 mark, and that's been the case. So let's see. If I go by the futures and options data, as of now, the call writing doesn't, it is actually signaling some sort of caution in the coming days. But let's just pull up a couple of your broader stocks from the broader markets. You've got OFSs once again from the IT pack. That's trading with gains of about 3.7% at the moment. Oracle Financial is the stock I'm talking about. Pritesh, on the charts, is there any sort of position that you would advise somebody to take on OFSs at these levels?
I think it's a good stock to buy into. The stock is going through the process of bottoming out. Now, when you talk about this kind of processes, in this kind of pattern, the stock tends to move narrow range, doing nothing much. But this particular stock is trying to break out from the range of 3500, 3700. When there is a confirmation on the upside, I think we could see follow buying coming in, and an upside target is possible towards 3850. So definitely this stock with IT stocks doing well, this stock definitely participate.
Shrikant, in fact, I found interesting what Ravneet was just talking about, that maybe put buyers are kind of covering position, or short players are kind of covering positions. 100 point or 100 plus point move on Nifty is kind of rare. And if you were an option trader, or I don't know, how do you really advise your clients, whether you advise them to take positions in option segment as well? Would it be advisable to kind of cover some shorts, at least take some profit at current levels on Nifty and Bank Nifty?
See, I think whenever there is a fall in the market, in the past also we saw that it comes down by almost 200 points, 190 to 200 points. This time also it is down by almost some 150, 140 points from the high. So in tomorrow's date, if there is a lower opening, then certainly we will ask our clients to take some profit on their option positions at or around 10,300 levels, because that looks achievable. And I think it's a first sell-off. So even if there is a higher opening in tomorrow's date, I think it will again come down to retest current levels or maybe some lower levels. So instead of like buying in today's date, or if it falls to 10,300, then certainly yes, we can ask our clients to take some profit on their option positions.
Okay, so you'll hold on to your short positions as of now. There is no hurry to cover the shorts really. Well, I think it's time to look at our small cap stock of the day, isn't it? Moving on to the small cap stock of the day. Yes, Kitex Garments is the one. And Nikki Mirchandani joins us with more details. Nikki?
Hi, the stock has risen as much as 16.7% today to its highest level that was seen in April 2017. In last 5 odd session, the stock has gained as much as 40 odd percent. Even in today's trading session, volumes remain pretty much high at 26 times its 30-day average volumes. And in terms of market capitalization, it's a 2,000 crore worth market capitalization company, but then it has been a strong run ever since the company has posted good set of numbers. If you look back at the numbers that were reported for the September ended quarter, revenues have risen by 39% at 148 crore as compared to a number of 106 crore in the base quarter, and net profit has also shot up by 84% for this company at 24 crore as compared to a figure of nearly 13 crore in the base quarter. For that matter, EBITDA has also risen 35% on year-on-year basis. However, for that matter, margins pretty much remain flat at a number of 29% in this quarter as compared to 29% in the base quarter. So there is not much of margin expansions though, but then there has been a good growth in terms of there has been good operational efficiency maintained by the company, and also some other operating income that has helped the bottom line of the company for that matter. In terms of about the company, a quick roundup of what this company is. It's a garment company that we're talking about and has a market capitalization of roughly around 2,100 crore that I just mentioned. It's divided into fabric and ready-made segment, which has a bifurcation of segment of nearly 66% and 33% in its overall top line revenue for that matter.
All right, Nikki, thanks a lot for bringing us all those details. Remember, the stock was locked in upper circuit with gains of 20% in yesterday's trade after posting strong set of numbers. Natasha, do you track this one? No? All right. But there are a couple of stocks from the broader markets. Pull up Universal Cable. That's seen strong gains in today's session. Despite of a weak market, it is holding to its gain. Still off day's high with gains of just about 6% right now. And the other one is Balmer Lorry. That's the other counter, which has pretty much seen positive gains. It's up almost close to 9%, quoting at levels of 277. Pritesh, on the charts, do any of these stocks, they look good to you? Barmer, Lorry, Kitex, or even Universal Cables?
Barmer definitely, looks good on the chart. We are talking about range break at the top, and now see, it's a strong uptrending counter. The stock has seen a rally from, back in March 2016. The stock was trading around 130 odd levels. From there on, the stock had seen a rally towards 270, and then for last couple of months, in fact, from last 7-8 months, the stock has been moving in a trading band at the top of this trend, and now it is attempting to break on the upside. Definitely a good stock to buy into. We can see a rally towards 325 at least.
Okay. Natasha, are you tracking Arvind? There are talks of a strategic announcement coming from the company as well. What's your call, really?
So, by the looks of it, we do think that there could be demerger on the cards, although that's something that waits to be seen. It's largely speculation at this particular point of time. They do have a call later on today, so let's just see what they have to say. But if that were to go through, and depending upon what metrics they use and exactly how the deal pans out, it could look attractive even in terms of fundamentals.
Well, technically, Shrikant, what would be your view? The stock has gained around 17% in a month's time.
See, it is outperforming, and this particular stock has spent a lot of time, almost 2 months, between the range of 425 and close to 360. So it was a triangle sort of consolidation, and out of that, the stock is now moving up. So if we take out some targets for this particular stock, then it comes to close to 490 to 500. So it's in the near term, we are expecting 490 to 500 achievable for the stock Arvind Mill. But if there is a medium to long term view, then certainly it is heading for the levels of 650, 700. And even at this price, it looks attractive because again, it is from the basket of consumption oriented story. So there we have a specifically bullish view, and we have seen these stocks are going up with good volumes and good price formations. So Arvind Mill is a buy at current levels.
All right, so Arvind is a buy technically at current levels. BHEL came out with its numbers today. Well, the numbers were not so great, and you can see that reaction on the stock price. The stock's almost trading at day's low with cuts of 5%. Natasha, any view on BHEL?
I think within the capital goods space, we've been avoiding BHEL for a while. Within the space, we still prefer L&T and in fact even Thermax and Cummins, but definitely not BHEL.
Well, thanks Natasha for taking time out and joining us. And let's look at some more stocks which have been really buzzing. Jet Airways is down 4% now. Volumes, if you look at it, is marginally above average as far as I can see. Shrikant, what's your call on Jet? Or say the aviation segment in particular, in general?
Pradeep, I think because of this sudden rise in crude prices and they are sustaining above the mark of 60, there is a profit taking, or maybe we can say it's some short candidate kind of structure we are seeing on the chart. But the way the stock has moved up from 465 to almost 630, 640, it seems that it's a profit taking. And if there is any further more correction, then around 565, 570, the stock is having very good support. If we go through with the chart of Brent crude, then we are of the view that it is heading for the levels of 70 in next maybe a few weeks of time. So if that's the picture, then these companies are not going to do well. And technically also it's a first sell-off which is happening in the stock. So maybe further more correction up to 570 is not ruled out, but there the stock is certainly a buy. So wait at these levels to take any fresh positions. If there are any trading positions, then one can keep a stop loss at today's lowest level. And if there is a short positions, then one can hold on to it for the target of 570.
All right, there's mild bit of recovery that one can see for the benchmark indices. The low for Nifty today was 10,341. From there, it's about 10,368, so just about 28 points recovery that one can see, and it's just off day's low. And similar is the case for Bank Nifty, not major recovery, but still it's off day's low, holding above the 25,300 mark. Let's also do a check for the European markets. Let's see how they are trading at the moment. The indices will just come up on your screen. So it's been a mixed start there. CAC and DAX are trading with mild bit of gains there, whereas FTSE is just marginally in the red. So it's turning out to be a mixed session. And what I read was DIGO has slumped 7% there. So let's just check if, I'm sure there's no rub-off effect seen for the Indian unit because nothing is related. It's just that Diageo is the majority shareholder for United Spirits. Let's see what that stock is doing currently. United Spirits will just come up on your screen. Remember, the earnings were pretty good and we had seen a significant move for United Spirits. So not doing much, but still it is down almost 2% in today's session, holding above the mark of 3,000 at levels of 3,048. Well, it's that time of the show when we get you the Fab 4 stocks of the day, and to take us through the same as usual, Yash Upadhyay joins us. Hi, Yash.
Hi, good afternoon, Navneet. So we start the Fab 4 today with a pharma counter, and it is none other than AstraZeneca Pharma. The stock has gained the most since June of 2015, gaining close to 9% after the company reported a strong set of Q2 numbers. We saw revenue increased by as much as 19% to 164 crores versus 134 crores in the base quarter, while net profit came in at 27 crores versus just a 0.8 crore of net profit in the base quarter. So good numbers there for AstraZeneca, and the street giving a thumbs up there. Moving forward, we have NBCC. Now this one is up almost 8% after Bank of America Merrill Lynch initiated coverage on the stock with a buy rating and a target price of 330, which roughly translates into an upside potential of close to 25% from yesterday's close. Moving forward, we also have MMTC on our radar. Now the stock is up close to 11% and hit a fresh 52-week high today on the back of news that the company will consider the proposal to merge its two trading companies with MMTC with State Trading Corporation Limited. And lastly, rounding off the Fab 4, we have Barmer Lorry. Now this one is up almost 9% and has been gaining for a fifth consecutive day, gaining close to 15% in that period, hitting a fresh life high today of almost 293.80 on the NSE, with volumes 2 coming in substantially higher at more than 30 times its 20-day average.
Thanks, Yash, for the details. I think 3 PSUs at least on that chart. So that kind of tells you where the maximum movement is today. Avinash Korakshakar, Head of Research at Joindre Capital, joins us in the studio. Avinash, if you were to pick up a PSU stock, which one do you like?
No, I think, Pradeep, I think PSU stocks I would be, positive on NMDC, considering the fact that iron ore prices have moved up quite significantly and the stock currently trades at a fairly attractive valuation. So I think NMDC around 130 odd rupees, definitely looks attractive if one takes a slightly medium-term view. And considering the fact that, with iron ore prices going up globally, obviously the local companies, especially NMDC, is also poised to, increase prices. So that could be a good choice in the current scenario.
Okay, and Avinash, there's been a bit of correction in the markets. I'm sure people who wanted to, enter the markets at these elevated levels, they would have waited for this short-term correction. If I were to ask you which are the stocks that you would like to buy at these lower levels, besides the one you have mentioned, which one would that be?
No, I think, we are positive on auto components. I think stocks like Sundaram Fasteners, which have actually moved up also pretty fast. They've seen a mild amount of correction. So that could be a good choice. My sense is, I think auto components as a play is definitely going to do well. If the crude prices move up, the rupee weakens, I think these are companies which are large exporters. So obviously they gain. Plus the domestic market has been showing good traction. Plus some good defense names, something like a Bharat Electronics or typically a Cochin Shipyard. These are companies which are very solid in terms of balance sheet, in terms of order book, revenue visibility. So clearly, both these companies also could stand a good choice, even if one were to accumulate at the current levels.
Okay, so that's the call here. Let's look at Just Dial. The stock is down 9% now. So far, there has been selling in this counter since morning, actually. Avinash, going by the numbers, I think there was not that much disappointment. In fact, there is operational improvement in the company if you look at the result really. What is that market didn't like which has really triggered this kind of selling?
I think, Pradeep, for the last 2 quarters, the previous quarter and the current quarter, most of the improvement in the margins have actually come from cost rationalization and not from the kind of top line growth. In fact, the markets would have been happy if there would be a strong double-digit growth. That is what the markets are looking out for, which has probably not come in. But cost rationalization wise, the company is pretty confident that in the coming 1 or 2 quarters, despite the kind of ad spends they have spent, their costs are going to come down. So that has helped them to elevate their EBITDA margins. Nevertheless, as you pointed out, operational efficiency has still come in. We have seen improvement in operationally EBITDA margins. But I think overall net, I think the market should obviously like to see that top line growth getting stronger, because that is where the markets are slightly worried. If Google comes in with a stronger aggressive push in this segment, the chance for a Just Dial to compete with the Google is definitely obviously not that great. So probably markets are waiting for that quarter when you could see double-digit top line growth.
And actually, before the numbers, Pradeep, the stock had rallied a lot, almost a 15% move that one had seen there. So Just Dial is probably seeing a bit of profit booking as well, just post the numbers, down almost 9 to 10%. Well, it's about 3 o'clock. Let's just check which are the stocks that can enter the F&O ban period for tomorrow's trade. And well, there are two stocks which have come up in my list. One of them is India Cements and the other is Jain Irrigation. If you look at the overall open interest as a percentage of MWPL for India Cements as of yesterday's close was 91%. And if you could just pull up the futures, we've seen a bit of addition in terms of open interest coming for both futures as well as options. The November futures will come up on your screen, and similar is the case for Jain Irrigation. Yesterday it was almost 88%, and today we have seen a bit of open interest addition coming about there. So for a stock to enter into the F&O ban, the overall open interest in the F&O market has to breach the 95% mark. So as of now, if you go by the trends, it looks like that it may enter. But remember, anything can change in the last 15 to 20 minutes of trade, Pradeep.
Definitely. What is also looking interesting, selectively there is some amount of buying in some mid-cap stocks. For example, look at VIP Industries. The stock has moved up 5% in last half an hour or so. Let's pull up the chart and it will kind of show you. It's in fact coming off the day's high, but again of 4.5% net. Roughly half an hour back, the stock was completely flat. There are more, like Polaris Consulting is another stock which has moved up by 3.5% in last half an hour or so. You can see the spike clearly here. Pritesh, have you looked at these two charts, VIP and Polaris? Is there a trade really?
I think Polaris is a stock which is worth looking into. With a strong move from 220 to 300 level, thereafter there was a bit of retracement. The stock retraced again, made a strong coming into today's trade. I think it could attempt levels of 330 in the near term. So definitely we need to maintain a stop of 295, and on the upside 330 could be a target.
Okay, can we pull up the intraday chart of Arvind again? I know we've spoken about the counter, but looks like there has been a sudden spurt which has just come about, up 3.5%, Arvind at levels of 453. Avinash, we've been chatting about this counter with all our guests. We know there is some bit of announcement which could come by, but anything that you're gathering here, Arvind?
I think clearly, Navneet, I think markets are obviously expecting that along with the Q2 results, I think some announcement could come in on the demerger, which is keenly awaited by the markets. And I think already some PE funds have taken a 10% stake. So markets are gung-ho on the fact that if this retail business, which is the branded business of Arvind, actually gets listed separately, we could see value unlocking coming in for the parent company and for the shareholders. And obviously looking at the kind of growth numbers and the kind of growth targets the management has put here, I think clearly this is one event which, if it unfolds, you could see a lot of re-rating happening, probably because the retail and the branding business has got far more growth than the domestic textile business.
ITD Cementation is another stock which has gained around 4% in last half an hour or so. Now, interestingly, this is one company which has a similar profile, so to say, if that can be compared with Dredging Corporation, the PSU company that really moved up. But the Dredging Corporation moved up on the hopes that a private buyer will come in and buy. Now with ITD moving up, have you been tracking this stock? Any calls on ITD Cementation?
No, I think Navneet, they have a Pradeep, they have a very strong order book, but the last quarter was a slightly disappointing quarter. The company posted a slight dip in its EBITDA margins, but looking at the kind of mastery the company has got in several niche projects like underground tunnels, typically which require not only skill but good engineering kind of expertise. I think definitely this is one company which should benefit, hopefully if the order book actually continues at a strong pace. I would believe that yes, from a longer term perspective, ITD Cementation definitely is a MNC player operating in the engineering space and can do well, provided we see a lot of order wins coming its way.
Well, Adani Power is the one which has fallen today on a good amount of volumes in the cash segment. The stock's down almost 5.5%, but clearly the day belongs to the pharma space and not for good reasons, but all a bad one. Avinash, Lupin is down almost 16 to 17%. Would you dare to buy at these levels after that warning letter has been issued by US FDA?
No, I think, Navneet, if you have heard the management comment, after the announcement, I think they were still unclear and they clearly said that this could obviously upset their product launches going forward.
Right.
So I would believe that there's some more downside expected because the markets were not expecting, an import alert both for Goa as well as Indore, and Goa is definitely more important because almost 60% of its revenue caters to the US market. So to that extent, I think it's a negative surprise. You could possibly see a very bad, maybe the third and fourth quarter also. So I think it's better to keep away till some more clarity emerges.
So what's your overall strategy on pharma? Because this is one cheap sector, so to say, other than IT, where people have been looking to buy. And in fact, if you look at it, traders have been definitely taking positions. Retail investors have been taking positions. Do you think it's the right time to enter pharma or no?
No, I think, Pradeep, selectively, stocks like, say, Aurobindo Pharma or typically even a Torrent Pharma, which now concluded a deal with Unichem. I think there have been some pockets of comfort where the regulatory hurdles are not there. So I would believe that it's going to be a pick and choose market, not across the board. But yes, I think pharma has come at very attractive valuations. So somebody who's got a contrarian call, who wants to possibly build a basket for over the next 2 years, these are good prices to enter, provided one, gets a fair amount of comfort that no further negative surprises could come in.
Okay. Well, clearly today IT pack has been very strong despite of a weak market. We've not seen any sort of selling pressure coming for these IT counters. Infi is up almost 3% right now. HCL Technologies is one of your top gainers on Nifty. That's up almost 3%. And well, you've got a couple of the mid-cap counters we've discussed. OFS's Hexaware is up almost 5.5%. Pritesh, on the charts, Hexaware, does it trigger anything? Would you advise taking any sort of fresh longs at these levels?
I think we've already seen a strong move from 270 odd levels to 330. From this point onwards, I won't be, quite keen on this counter. But there are other stocks from the large cap space also making good, strong moves into today's trade. So I would venture in these stocks rather than looking into Hexaware.
Okay, so that's the call on Hexaware coming here. There is one more stock, Tube Investments, that should come on your screen. Up 4% in last half an hour or so. There are quite a few mid-cap, small-cap stocks which have been buzzing, especially in last half an hour to an hour's trade. Shrikant, have you looked at this chart? Any call on Tube Investments?
Pradeep, I think the stock is going up steadily, and every time when it retraces by 10 to 15%, again it comes down. So this time also it was at some 860, 865 levels. From there it now retracing to the levels of 790, which is close to some 10% kind of correction. I think at these levels it's a buy because overall these mid-cap stocks are really doing well. And in the past also, when the stock was in the range of 750, 770, there was good amount of volume and one bulk deal was also there. So while looking at the formation and the way the stock has already corrected, I am of the view that if we take some long position into it with a view of at least next few months, then certainly we can make money, because finally, based on long-term charts, we are of the view that it is heading for the levels of 1000. So currently it is at 790. Stop loss should be close to 750 levels, and buying should be done between 800 and 785 levels.
Okay, let's just pull up Balkrishna Industries. That counter has touched its fresh 52-week high in today's trade. It's holding to its gains, almost at day's high actually, up 2.5%. And Avinash, I think you like the auto space. Do you like this company? I think they are also in the replacement market, if I'm not mistaken.
I think, Navneet, they are into the off-road tire segment.
Okay.
They are not a typical automotive tire company. And I think if you look at the numbers have been pretty good. They have a healthy balance sheet. So I think, yes, over a longer term perspective, this could be a good opportunity, because they have recently completed an expansion at Bhuj. So that could possibly propel a strong volume growth, a strong kind of margin improvement, as well as a absolute top line growth, in the next, say, couple of years.
Okay, look at Info Edge. That's yet another stock which has moved up quite a bit. In fact, 6.5% move on that one over the last few minutes of trade. So this has been a significant mover in today's trade. Also, Team Lease has moved up by 2.5–3% over the last few minutes. Ashoka Buildcon is yet another interesting stock which has been moving up. So there is decent buying happening at lower level in Ashoka Buildcon. Avinash, do you like this stock or anything else in construction? What's your pick in the construction segment, really?
I think, Pradeep, I think within the construction segment, we like stocks like, say, Sadbhav or maybe an NCC, where we believe that not only the profit margins, but in terms of order book, I think these companies should do better. So probably at declines, these two stocks would definitely be a good addition to one's portfolio.
Well, you got a couple of stocks which are just which have seen a bit of gains in the last few minutes or so. Let's just pull up Datamatics Global Services. That's the counter which is up almost 10% right now. It's got a free float of almost 163 crore, quoting at levels of 113. I'm talking about Datamatics Global Services. There you go. That's the chart. It's, I guess, off days low, off days high, pardon me, but still holding to its gains of almost a 10%. Besides that, well, a couple of more counters. HPCL is holding up. That's up almost over 2%, quoting at levels of 444. Pritesh, any trade do you see on HPCL on the charts?
I think if you look at the chart patterns of IOC, HP and VP, despite the down move they had recently, the entire basket is stuck in a trading range. I think for HPCL, it's important that we fall below 401. 421, then only we can see a build, a weakness could persist in next couple of days. In today's trade, there is a respite coming in. The stock is up by 2.5%, but I believe that at the higher levels, if we look at the resistance point of 465, 470, this point would be difficult for the stock to surpass. So I think on a downside, I think we can see sharp selling coming in.
Okay, it's 3:15, the time to take a look at what are the dealing rooms really talking about, what are the recommendations coming from there. Yatin Mota and Darshan Mehta are here with all these details on their channel check. What are you, Yatin?
Pradeep, if you look at HPCL, that is one oil marketing company, was down 2% in the morning and now, up 2%. So almost a 5% kind of intraday move coming in for that stock. And we are told that domestic funds are said to be buyers as far as this oil marketing company is concerned, despite the fact that IOC is down 2%. So outperformance coming in as far as HPCL is concerned versus the other oil marketing cos. We have Bank of India and PSU banks in general are looking at some selling which is happening in the marketplace. So dealers are recommending a sell today, buy tomorrow kind of a strategy here, wherein they're expecting a 2 to 3% trading downside. And finally, watch out for Suzlon. They will be reporting the quarterly earnings this week, and the talk is that the numbers could be weak. So HNIs are selling their positions as far as Suzlon is concerned, but Darshan has a few more stocks for us. Yeah, so Sun Pharma will be in focus tonight. In fact, Taro, their Israeli subsidiary, will come out with numbers, and the general sense that we are getting from dealing rooms is that Taro will report a very strong set of numbers. So Sun Pharma will be in focus. Again, earnings buzz. Tata Motors has been rather active over the past few days. The general buzz is that JLR this time around will come out with a strong set of margins and strong set of performance. So Tata Motors again in focus. And finally, Infosys is something. A large FII is continuously accumulating Infosys at low levels. There's no hurry to buy, but at this level, that FII is seeing value in Infosys.
All right, Darshan as well as Yatin, thanks a lot for getting us that dealing room check. But the markets are actually still in the red. There is no recovery which has been seen. A slight bit of recovery was there, but once again, Nifty's almost at day's low, trading at those levels of 10,344. Bank Nifty also down over 1% with cuts of 280 points, and Sensex also down almost 380 points at the moment. So clearly, it's not turning out to be a great day for the Indian markets. But as we near the end of today's trading session, let's also take a look as to what are the key data points that could be in focus for tomorrow's trading session. Saloni, over to you.
Well, Navneet, for tomorrow we'll be keeping an eye on a bunch of companies reporting their second quarter earning numbers. To start with, do keep an eye on Ashok Leyland, Balkrishna Industries, Bharat Forge, CPC, IRB Infra, Muthoot Finance, and mind you, IRB Infra and Muthoot Finance are trading down over 3.5% ahead of numbers tomorrow. So some caution in there. Do keep an eye on those two stocks especially. While Future Consumer on the other hand is up almost 3.7%. Now, other key earnings that we'll be watching out for tomorrow is JK Lakshmi Cement, Shree Cement, Mahanagar Gas, Pidilite Industries, Voltis, VIP Clothing, and a few others. On the economic data front, China is to release trade balance data, while US is to release crude oil inventories data, which is a weekly data. Now, remember that oil is trading near 2-year highs ahead of the anticipation of a supply cut. And finally, we'll be watching out for the commentary by US Fed Chair, which is scheduled for tonight on the economic outlook. Now, it may have some impact on markets in the early Asian trade tomorrow.
Thanks, Aloni, for all these details. Well, if I had to pick up one stock from the list, I think Bharat Forge really looks interesting. Going by the high frequency data, one should really expect a good top line at least. But Shrikant, how is the market really positioned ahead of this number? If you could look at the chart and tell us.
I think the market is down. It was like, I can say, it was over retraced, and because of that it is correcting. So it's a normal correction that we are seeing. But yes, certainly if the market fails to hold around 10,300 levels, then furthermore sell off up to 10,200 is not ruled out. There the market is having very good support. So we will take contra call of going long around 10,200 levels, and if there is a reversal formation at 10,300, then we will come out with buy recommendation. But right now it's a time to just stay away, because there is a steep sell off, and today also when there is a when the market is down by almost 120-130 points down, it is not recovering back. Even Bank Nifty is also down and IT is up. So always whenever there is a weakness in Bank Nifty, we always see a very strong strength in IT, which is a unique kind of combination that we always see, and today also we are seeing the same kind of scenario. So that is why we are of the view that the market is still into that corrective mode, and it is not into that specific sell-off mode.
Okay, Shrikant, I was saving this question for the end. Well, I was actually asking you, how are the traders really positioned on the Bharat Forge counter ahead of numbers?
Okay, sorry. Yeah, see, Bharat Forge is like, it is into strong breakout. It was like around this 675 levels some 2 years back in the year 2015. From there all the way it went down to the levels of 350, and now again it is sustaining well above the mark of 650, 680. So I think around these levels, if there is any long positions, then certainly they can hold on to it, because the way there is a strength in the stock, we are of the view that it is heading for at least 750, 770 in next couple of days. So if there is any correction, we should look for adding some long positions instead of getting out of this particular stock. So it's a buy. Bharat Forge is a buy at current levels.
Okay, let's just pull up Castrol India. The numbers are flashing there on your screen. The profits for the quarter have gone up by almost 27%. That's coming at 178 crore. Also, an important corporate action being announced by the company. The board has approved a 1:1 bonus issue, and the revenues actually are down almost 2%. Avinash, do you track Castrol India?
Yeah, I think not only these numbers are definitely strong. In fact, 27% growth in the bottom line should be seen with a healthy volume growth also. But I think going forward, one would like to know, what is going to be the impact on raw material costs, because normally their main raw material base oil actually moves in tandem with crude oil prices. So I would believe that yes, the coming quarters could be a bit challenging, but yes, numbers are definitely good, and I think the bonus of 1:1 also is a sweetener. So you could see a little bit of uptick in the stock price.
Okay, so some uptick can be expected in stock prices. Let's see which are some other last-minute movers. HSIL is an interesting stock which has been moving up over the last few minutes. So there are quite, I think the list is really long. If you try and look at the stocks that have really moved up, there has been some buying in IPCA also. The stock is up around 4%, and otherwise, weak market, a bad day for pharma stocks really. So instead of panicking and selling in last minute, traders are actually trying to buy and take some positions here and there in select stocks. Like when I mentioned Info Edge, the stock has now gained roughly 8%. It was a swing move of 8% really. This was down 3%, is now up 4%. So that's also an interesting stock really to track. Now, is this the right strategy, Shrikant, in this market to try and buy some of the mid-cap stocks that have corrected? Do you advise that? Would you have a buy call in mind?
Yeah, certainly, because whatever the trend that we are going to see in next 3 to 6 months of time, that would get like presented by all mid-cap stocks, and that is why we are like keenly focusing on all mid-cap stocks. Info Edge, which is trading at 1228, there also a very decent technical breakout that we are seeing on the chart, and we are of the view that it is heading for at least 1500 in next couple of weeks or months. We also like GNFC, Gujarat Narmada Fertilizer, which is trading at 505, 510 levels. There also we have a target of close to 650, 700 on the higher side. Currently it is very close to its support area. So between this 500 and 480, we should look for adding GNFC to our positional portfolio, and we can expect target of 700 plus. So there are like a number of stocks, but I think if we focus on few ideas, I think that will do well.
Shrikant, there's been a good amount of downfall seen for your PSU banking stocks as well. The Nifty PSU banking index is down almost 4%. So stocks like OBC, Union Bank, Bank of India, Punjab National Bank, all of them have seen cuts between in the range of 4 to 6% in today's trade. Is there any shorting candidate here?
I think they have fallen very badly in today's date, and it was mainly because of there was like a lot of trading positions. They were available at their important supports after like hitting their important highs. So I think because of that, the positions are like maybe people are exiting out of those positions. OBC looks short candidate at these levels because this particular stock is the weakest one, and today also the stock is down by almost 5%. It is trading at 135 and it is heading for the levels of 127, 128. So here we can keep a stop loss at 138, and we can create some short positions on OBC because that looks weak. But I'm of the view that if we concentrate more on stock like Indian Bank or Bank of India, which are outperforming, and in this current fall, if we like really want to choose any particular stock to buy with a positional point of view, then Indian Bank and Bank of India are showing a lot of strength, and they are looking really good to buy even at current levels and more on dips.
Okay. Avinash, what do you think is government really trying to achieve with the MMTC and STC merger? What's your thought here? Would you like to buy any of these stocks? Have you ever actually taken any position in these two stocks? Because they're not very actively traded or largely invested stocks. But as and when government actions are there or before the budget, that's the only time when we see these stocks really moving.
No, I think, Pradeep, the only logic for these stocks to get merged, MMTC and STC is because largely they are into trading, they are not into manufacturing. So, the common business objective has obviously made the government believe that it's better to have one entity. I would believe that yes, the merger should be favorable to MMTC, and I think in that case it's better to stick to MMTC, because clearly our sense is that STC, there was some talk about government divestment at some point of time. So I think clearly MMTC, if it does get a favorable kind of swap ratio, then I think MMTC could possibly see a bigger upside in the near term. But yes, overall, I think what kind of growth numbers could come in after the merger is something to watch out for, because earnings for both these companies have not been all that impressive.
Well, clearly, yeah, the earnings have not been great. And the other PSU company which was going up in the past few sessions, in fact, in the last 1 month, had seen significant gains, the Steel Authority. So that's seen a bit of profit booking in today's session. Steel Authority is down almost closer to 7%, trading at day's low. Avinash, I want to get your view on Titan. The numbers were superb. The performance in the jewelry segment is only improving. I'm sure factors like GST or Demon have worked in their favor. We did see a rub-off effect coming on PC Jewelers, but Tell me one thing, with today's correction, would you advise to buy these counters at lower levels, especially Titan?
Yeah, I think clearly if you hear the management commentary, clearly what was very strong about the management commentary is that, the demonetization has actually made a lot of unorganized players shut down and a lot of unorganized demand getting into the organized basket. So I think clearly this is not going to be a one-off effect, and I think you could possibly see both the top line as well as margins improving. And hopefully, with the kind of shift from unorganized to organized, I think a player like Titan, which has got a very strong brand recall, could possibly do better. So I think a decline should be used as an opportunity to buy. But yes, I think having said that, I think the outlook should be for the next 12 to 18 months. Prices have moved up significantly post the results.
Well, that's right. Yesterday, the counter was up almost 18 to 9%. Management commentary was definitely positive for Titan. But 3 minutes for market to close. Let's head across to Pradeep to find out how exactly the closing is panning out. And clearly, Pradeep, not a great day.
Not at all. Bulls would really be disappointed because after a fall of 150 points or so intraday, one expects some kind of bounce in last hour of trade. But if you look at Nifty, it's going to end with a century on the negative side. So to say, Nifty Bank is down 275. So that's again a significant cut in that one. Even if you look at the mid cap and small cap, interestingly, picture turned negative after the first hour of trade, and advanced decline ratio has been negative. Look at the Nifty small cap down 1.5%, close to 2%, and BSE small cap also 1.5% lower. Let's see which stocks were really responsible for the fall in index. Well, first up, on top you have some gainers, and there is one sector clearly marked out in today's trade: Infosys, TCS, Wipro. So IT stocks, the only sector actually which has been holding on, and I would say HUL and ITC. So FMCG didn't participate in the fall at least, but they were more on the neutral side, not extending any meaningful support to the indices. Heavyweights like ICICI Bank, L&T, HDFC, somewhere in between, but down 1% each. And looking at the weightage, I'm sure their contribution on the downside is much more significant than what the percentage change really reveals. Well, Lupin is the worst performer, followed by Cipla. So Pharma right at the bottom as expected.
Well, clearly, Pradeep, not a great day for the broader markets as well, but a couple of earnings reaction was something you got to see. So I'll just start off with Just Dial. The stock tumbled nearly 8 to 9% today. The numbers were not bad, actually. On the operating front, it was just about okay, but the stock had actually run up before the numbers, and what you saw today was profit booking. So the counter closed with cuts of almost 8%. BHEL was the other counter which came out with its earnings. Not great set of numbers at all. A muted growth on the top line. The stock closed in the red, almost at days low, as you can look at it on the intraday chart, closing with cuts of 5.5%. PC Jewelers is the other one. The stock went up yesterday post Titan's number, but today clear profit booking seen for PC Jewelers in a market like today. The stock was down 6%. Steel Authority has been going up. In fact, this counter in the last 1 month has risen 50%. So today it saw a bit of cool off coming about, closed at days low with cuts of nearly 7%. The entire PSU banking space was down today. So stocks like PNB and Bank of Baroda saw major cuts in today's trade. PNB was down 5% and Bank of Baroda was also down about 4%. What outperformed was the IT space. That was the sole index gainer, sectoral index gainer, which stood out. So stocks like Hexaware as well as OFS, both of them are in the futures market as well. So we did see a bit of fresh long positions coming there. And NBCC, what a move this counter has had. Today also it stood out in the weak market, finally closing with gains of almost 9%, which was at day's high, Pradeep.
Let's look at which were the stocks that really putting pressure on the index, and I think Reliance would be at the top. So what is the total contribution? 22 points on the negative side. That is RIL, followed by SBI, 11 points, and Lupin, 10 to 11 points. HDFC also responsible for a downside of 10 points in trade today. On the positive side, if you look at, there is only one contributor in double digit, that is Infosys alone. TCS, HCL Tech also chipping in, but look at their weightage really. It's not significant, so not enough really to counter the negative pressure that came from RIL and also the banking majors. If you look at the overall market breadth, what's interesting, over the last two sessions, if you remember, there used to be some correction towards the end of the day, but today, after the first hour of trade or so, after 10 o'clock, we saw the market breadth turning negative, and it remained the same even towards the end, we saw the market breadth kind of widening. So there was more profit booking, more selling pressure really coming there. If you look at the overall heat map of the market, this morning itself, we saw some kind of pressure building in on the negative side, and it was more or less 50-50 or 40-60 kind of equation in early hours of trade. But towards the end, if you look at it, it's almost 80-20 kind of a scenario, nearly 80% stocks in red. So not a pretty picture as far as the index stocks are concerned. And in a market like this, if there is significant turnover, it kind of tells you how much selling pressure was really there. And if you look at the cash numbers, well, 39, close to 40,000 crore on the NSE cash. That is what you really see. So it kind of tells you, significant selling pressure in today's market, Navneet.
Clearly not a great week for the markets, but let's cut across now to the Finance Minister Arun Jaitley, who is talking on the first anniversary of the government's demonetization exercise.
कुछ अवधि काल के लिए कुछ चीजों के लिए, कुछ सर्विसेज के लिए पुरानी करेंसी का प्रयोग हो सकता था और उसके बाद उसको बैंकों में डिपॉजिट करना और उसके स्थान पर 500 और 2000 रुपए की नई करेंसी रिजर्व बैंक ने अनाउंस की थी। निश्चित ही ये एक वाटरशेड मूवमेंट जिसे कहते हैं, भारतीय अर्थव्यवस्था के लिए था और पूरा वर्ष भर इस निर्णय को लेकर इसके कई पहलुओं पर देश के भीतर भी और बाहर भी एक चर्चा हुई है। भारतीय जनता पार्टी की ओर से हम लोग ये मानते हैं कि देश की अर्थव्यवस्था और देश के व्यापक भविष्य के लिए जो यथास्थितिवाद स्टेटस को था, उसको बदलना अति अनिवार्य था। The status quo needed to be shaken up. जो स्टेटस को था पिछले एक वर्ष पहले का, कि किसी भी अर्थव्यवस्था में कैश का अत्यधिक डोमिनेशन हो, और हिंदुस्तान की अर्थव्यवस्था में पूरे जीडीपी का ही 12.2% हिस्सा कैश करेंसी हो, जिसका 86% हाई डिनोमिनेशनल करेंसी हो, और इसके कई परिणाम रहते हैं। एक स्वाभाविक परिणाम है कि जब एक्सेसिव कैश ट्रांजैक्शन होता है तो वो टैक्स इवेजन को भी न्योता दिया जाता है, और जिन समाजों में टैक्स इवेजन ज्यादा होता है, वहां जो टैक्स देता है वो केवल अपने हिस्से का नहीं देता, लेकिन जो टैक्स इवेड करता है उसके हिस्से का भी देना पड़ता है, क्योंकि देश का खर्चा तो चलना ही है। तो इट्स अ डबल वैमी ऑन द टैक्स पेयर। जो साधन आते हैं उससे देश का विकास होता है, गरीब का कल्याण होता है, और इसलिए जब साधन संपन्न व्यक्ति वो साधन अपनी जेब में रख लेता है तो ये एक प्रकार से अन्याय भी है, अनजस्ट एनरिचमेंट भी है, कि जो साधन किसी गरीब के कल्याण में खर्च होने हैं, उन साधनों को संपन्न व्यक्ति अपनी जेब में रख लेता है। और राजनीतिक व्यवस्था में तो स्वाभाविक रूप से अधिक कैश होता है तो एक भ्रष्टाचार का एक केंद्र भी बनता है और कारण भी बनता है। कैश कम होने से भ्रष्टाचार समाप्त हो जाएगा ऐसा नहीं है, लेकिन कठिन निश्चित रूप से होता है। और इसीलिए जब से एनडीए की सरकार बनी मई 2014 से एक के बाद एक कदम जो सरकार ने उठाए, एसआईटी का गठन, ब्लैक मनी लॉ, विदेशों में जो साधन थे, पूरी जितनी ट्रीटीज थी उनको अमेंड करना, ग्लोबली ट्रांसपेरेंसी ज्यादा है, जो लोग एक दूसरे स्थान पर पैसा रखते हैं, स्पेंडिंग किस तरीके से हो उस पे कंडीशंस लगाना, बेनामी कानून लाना, इनडायरेक्ट टैक्स व्यवस्था बदलना जिससे जनरेशन काफी कठिन हो जाए, और इसके कई स्वाभाविक परिणाम हमने वर्ष भर में देखे हैं। कैश का बैंकों के अंदर आ जाना, मोर मनी इन द बैंक्स, इसलिए चाहे उसका एक्सपेंडिचर म्यूचुअल फंड्स में हो, कैपिटल मार्केट में हो, इंश्योरेंसेस में हो, इन सब क्षेत्रों में अगर हम देखें तो पिछले एक वर्ष में रिसोर्स अवेलेबिलिटी बढ़ी है। मोर मनी इन द बैंक, मोर मनी इन म्यूचुअल फंड्स, मोर मनी इन द कैपिटल मार्केट्स, मोर मनी इन इंश्योरेंसेस, और ये अपने आप में फॉर्मल इकोनॉमी में अधिक साधन जाए उसके संकेत में जाता है। कोई डिमोनेटाइजेशन वन ऑफ सॉल्यूशन है कि इससे सारा समस्या हल हो जाएगी, ऐसा नहीं है। लेकिन इसने एक एजेंडा बदला, और उस बदले एजेंडा में लेस कैश इकोनॉमी की तरफ हम जाएं। नंबर ऑफ इंडिविजुअल टैक्स असेसीज, उसकी संख्या नॉर्मल की तुलना में बढ़ने लगी, डिजिटल ट्रांजैक्शंस बढ़े हैं, हाई डिनोमिनेशनल करेंसी कुछ मात्रा में स्क्वीज की गई है, टेरर फंडिंग के ऊपर एक बड़ा स्क्वीज लगा है, और इस संबंध में स्वाभाविक है कि किसी भी लोकतंत्र में इसकी आलोचना करने वाले भी होंगे। एक तर्क ये कि लोगों ने सारा पैसा बैंक में डिपॉजिट कर दिया, वो तो अच्छा हुआ डिपॉजिट किया। कैश इज लॉन्डर्ड इन द सिस्टम। जब वो बैंक में आता है तो उसकी मालकियत किसकी है, ओनरशिप किसकी है, पता चल जाती है। और डेटा माइनिंग के थ्रू 1.8 मिलियन पीपल वो आइडेंटिफाई हुए जिन्होंने डिपॉजिट किए हैं जो डिस्प्रपोर्शनेट है, और आज उनको उसके लिए टैक्सेशन अथॉरिटीज के सामने जवाबदारी देनी पड़ती है। शेल कंपनीज जिनका प्रयोग इस मामले में होता था, आज टेक्नोलॉजी का प्रयोग करके उनका आइडेंटिफिकेशन इसमें सरल हुआ है। तो इसलिए केवल बैंक में चला जाना उससे डीमोनेटाइजेशन की सफलता और विफलता पे असर नहीं पड़ता। डीमोनेटाइजेशन ये एक बड़े प्रक्रिया का, विचार का एक उद्देश्य था कि भारत को लेस कैश इकोनॉमी, हायर टैक्स बेस, हायर डिजिटल ट्रांजैक्शंस, मोर फॉर्मल इकोनॉमी, और जिस गति के साथ रीमोनेटाइजेशन किया गया, एक प्रकार से कुछ सप्ताहों में या 2-3 महीनों में, वो अपने आप में उदाहरण था कि पूरे विश्व में इतनी बड़ी करेंसी रिप्लेसमेंट स्कीम इतनी सरलता से इस प्रकार से हुई है। हमारे विरोधियों ने कांग्रेस की तरफ से विशेष रूप से विरोध किया गया। दस वर्ष तक एक पॉलिसी पैरालिसिस, कुछ ना करना, ऐसी हुकूमत चलाना, और प्रधानमंत्री जी ने एक स्ट्रक्चरल रिफॉर्म्स, एक के बाद एक करके बदलाव लाने का प्रयास किया है। यूपीए और एनडीए में एक तरफ पॉलिसी पैरालिसिस, एक तरफ स्ट्रक्चरल रिफॉर्म्स, और हैरानगी तो तब है जब एक ऐसी इकोनॉमिक एक्सरसाइज जिसके पीछे एक एथिकल रैशनल है, एक मॉरल रैशनल है, उसको लूट कहना, an anti-black money drive is an ethical drive. An anti-black money step is a moral step. What is morally and ethically correct has to be politically correct. लूट तो वो होती है जो 2G में हुई, जो कॉमनवेल्थ गेम्स के कॉन्ट्रैक्ट्स में हुई, जो कोल ब्लॉक के एलोकेशंस में हुई, और इसलिए मुझे लगता है कि एथिक्स के मामले में भी कांग्रेस का और हमारा दृष्टिकोण बिल्कुल एक दूसरे से अलग है। Their primary object is to serve the family, and our primary object is to serve the nation. And therefore, even on these preliminaries, we may not be able to agree. भारतीय जनता पार्टी की तरफ से हम लोग ये मानते हैं कि अगर इस देश को एक डेवलप्ड देश बनना है, और आज हम लोग क्लेम करते हैं कि वी आर अमंग्स द फास्टेस्ट ग्रोइंग मेजर इकोनॉमीज, तो एक लेस कैश इकोनॉमी बनना, एक बड़ी फॉर्मल इकोनॉमी बनना, एक क्लीनर इकोनॉमी बढ़ना, ये इस देश के लिए बहुत आवश्यक है। और इस एक वर्ष के अनुभव के बाद पार्टी और सरकार दोनों इस निर्णय के पक्ष में दृढ़ रूप से खड़ी हैं। धन्यवाद।
देवेंद्र,
देखिए, मैं ऑलरेडी इसका उत्तर दे चुका हूं कि हम इसको बिल्कुल ठीक उचित मानते हैं। कांग्रेस का एक इतिहास था कि उन्होंने कभी कोई बड़ा कदम नहीं उठाया ब्लैक मनी के खिलाफ। जहां तक टारगेट्स का सवाल है, बहुत सारे प्रोसेसेस होते हैं जो पाइपलाइन में भी रहते हैं। जैसे जो लोग आइडेंटिफाई हुए, उन लोगों के खिलाफ असेसमेंट प्रोसीडिंग्स कंप्लीट करना, तो ये तो प्रोसीजरल हैं। लेकिन जो दिशा में हम लोग गए हैं, वी आर मोर देन सेटिस्फाइड। Well, on your second question, let me tell you that the remonetization has taken place almost instantaneously. And therefore, the pickup of trade begins thereafter. As far as your first question is concerned, I am choosing not to answer it. For the reason that it's not necessary for me to disclose all facts to which I myself am a privy in discussions within the government on a sensitive issue.
संजय,
बिल्कुल ठीक, गलत बात है। जो इसके लिए उपयुक्त तैयारी होनी चाहिए थी, जितना बड़े पैमाने का इसका इम्प्लीमेंटेशन आवश्यक था, महीनों पहले निर्णय होना, वैकल्पिक करेंसी पर प्रिंट होना, रीमोनेटाइजेशन के दौरान प्रिंट होना, उसको सीक्रेट रखना, ये सब आवश्यक थे। और उस परिस्थिति में जो सरकार की तैयारियां होनी चाहिए थी वो थी।
लीज में थी।
See, all that Dr. Singh has to do is to compare the relative credibility of Indian economy internationally pre-2014 and post-2014. Pre-2014, you were being considered as an economy impacted by a policy paralysis, where the word alphabet I was being threatened to be knocked off out of the BRICS. You were off the global radar. And today, there isn't an international agency which doesn't eulogize the kind and quality of structural reforms India is making.
Sujit Thakur.
I don't share that criticism of his. ऐसा है, दोनों में कोई अंतर्विरोध नहीं है। दोनों में कोई अंतर्विरोध नहीं है। आप जब आईडीएस की स्कीम लेकर आए थे तो उसमें भी यही कहा था कि जिसके पास ब्लैक मनी है वो उसको डिस्क्लोज करे, उसको 45% टैक्स देना पड़ेगा 30 के अगेंस्ट, और ज्यादा टैक्स देने के बाद वो उस पैसे को लेजिटिमाइज कर सकता है। उस अवसर के समाप्त होने के बाद जो कैश करेंसी कम करने का जो कदम था डिमोनेटाइजेशन का, वो उसके बाद हम लोगों ने उठाया था। तो सिस्टमैटिकली एक के बाद एक ये अलग अलग कदम उठाए जा रहे थे।
आप बोलिए, पूछिए। पूछिए वेंकट जी, पूछिए। रुक जाइए।
अगर करना होगा तो आपको आज थोड़ी ना बताऊंगा।
चलिए वेंकट जी, पूछिए। चलिए पूछिए, पूछिए, आप पूछिए ना।
Well, I think in politics there are certain social courtesies which are necessary, irrespective of political alliances and relationships. And the Prime Minister was only acting according to them.
शैलेंद्र, एक मिनट चलिए।
देखिए, ये एक, अगर मैं कहूं, ये एक, जैसा मैंने आपको कहा, ये एक प्रोसेस था। कैश करेंसी कम हो, करेंसी मैनेजमेंट रिजर्व बैंक करता है, वो अपनी नीति के हिसाब से इसको करेगा, लेकिन डिजिटल ट्रांजैक्शंस बढ़े और स्वाभाविक है कि अलग अलग क्षेत्रों में इसके बढ़ती हुई जो एविडेंस है वो उभर कर सामने आ रही है। मतलब 1 वर्ष पहले देश में डिजिटल ट्रांजैक्शंस के माध्यम से हजारों तरह के ट्रांजैक्शंस हों, ये कभी कल्पना थी क्या कि हर एक को मनरेगा की पेमेंट बैंक अकाउंट में मिल जाएगी, स्कूलों के बच्चों की फीस एकदम उनके बैंक अकाउंट्स में चली जाएगी, टी गार्डन्स में वेतन उनके बैंक अकाउंट्स में चला जाएगा। ये सब जो कल्पनाएं हैं धीरे धीरे उभरती हुई 8 नवंबर की इस घटना के बाद से आ रही हैं और ये एक प्रोसेस अनलीश किया है 8 नवंबर की demonetization.
All right, that was the finance minister addressing the media on 1 year of demonetization. Well, with that, it's a wrap on this edition of Countdown. Don't go anywhere. Coming up next is What Did You Miss? Stay tuned to Bloomberg Quint Live.
Are we live?